Good afternoon, everyone, and welcome to TradeStation. It might be evening where some of you are. This is Michael Burke. I head up client training here at TradeStation, and I want to welcome you to another edition of the Art of TradeStation. Today, we're going to be talking about some Forex tools. Keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed are for educational purposes and are not recommendations. Active trading is not suitable for everyone. Forex has a high degree of leverage and is also not suitable for everyone. There's additional disclosure information on our TradeStation websites, so take a look at that. This week we firmed up and are excited to announce that we will be holding a TradeStation Masterclass in London in the first week of September. This is a deep dive into the TradeStation platform. Jesus Nava and myself and a number of interesting guest speakers will spend 3 days showing you everything you need to know about the TradeStation platform. We'll talk about trading concepts, a little bit of testing your ideas before you trade, even a little bit of easy language. So if you really want to take TradeStation to that next level, make sure that you visit the TradeStation University site and learn more about Masterclass. So today we're going to spend just a couple of minutes with a quick FX concept overview, just some fundamental characteristics of Forex. Most of you are probably very familiar with Forex already at this point, but I just want to make sure we do a little bit of educational leveling so everybody's kind of on the same page as we go through these concepts. The next thing is we're gonna talk a little bit about how to measure out of the 28 primary Forex pairs, which ones are the strongest as far as momentum, either to the upside or to the downside. So we're going to kind of compare and rank all 28 Forex pairs by what I would call their strength or their relative performance to each other. And so I'll show you some tools that I use in this area. Primarily, the purpose of this presentation is to determine symbol selection. There are so many Forex pairs that you can trade, and you may have an idea that you think one currency is stronger than another currency, or you may want to go long or short a particular currency. If you're going to use the cash Forex pairs to do that, it's kind of important to understand the relationship between all of those different pairs. And we'll talk a little bit about those concepts that are important to determining symbol selection. So let's get some of the real basics out of the way here. Forex is a tremendous market to trade. There's a lot of opportunities in cash Forex. One of the things, of course, is that it's a 24-hour market, so you can trade pretty much anytime that you want to trade the cash Forex. And it's a very liquid market at most times of the day, even at night. This is one of the largest financial markets in the entire world. More foreign exchange trading happens than almost any other kind of trading, so there's always good liquidity. Forex trading also offers quite a high degree of leverage. And of course, that's a benefit if the trade goes right in our direction. But if it doesn't go right in our direction, a high amount of leverage, of course, is not necessarily a great thing. But there's also a number of risks associated with cash Forex that you need to be aware of. And most of you probably are already aware of some of these risks. I've already mentioned one of them, which is leverage. And of course, in the Forex world, there's also a bit of interest rate risk. So we'll talk a little bit about interest rate risk a little bit later as well. But keep in mind that currency prices are very driven by the interest rates at the central bank in those countries. And so if there is any kind of central bank action in any country that's associated with a Forex pair that you're trading, that's either going to have a positive or a negative impact on your trade. And it could be significant in many cases. We already talked about the fact that news and economic events are an opportunity, but they're also a risk. If you're in a trade and some kind of economic news or central bank action works against you, that is a risk. So you just need to kind of have your fingers and pay attention to what's happening in the world. You don't put on a Forex trade and then go to Hawaii for 2 weeks and hope everything works out. You've got to kind of keep on top of that. And that's good advice for any trade, to be honest. So in the screen that I'm showing you here, every cash Forex symbol is made up of two symbols. There's the base symbol, which is what we're actually trading, and then it's quoted in another currency. So for example, if I'm trading 100,000 units of the euro versus the dollar, it tells me how many dollars it's going to cost to acquire those 100,000 euros. So the exchange rate is the base currency. Think of it as I get one of those for whatever the quote is in the chart or in the quote window for the second symbol. So here in euro dollar, US dollar, what does it cost for 1 euro? That's what I'm going to see in the chart. That's what I'm going to see in the quote window. So for Japanese, for Great Britain versus the Japanese yen, so the pound versus the yen, I'm getting 1 pound. And in the chart, it's telling me how many yen I have to pay to get that 1 British pound. So keep that in mind as you're looking at these symbols. What am I trading, right? So think of it this way. If I buy a euro dollar, I want the value of the euro to go up. So in other words, I want to have to pay more dollars for that euro. And if I go short the euro dollar, I want the euro to be worth less than a dollar. So I want the quote in the chart to go down. And the last thing I just want to chat about real quick here, actually there's two things, is the cost of trading Forex. So keep in mind that the way that your Forex broker works is that he is offering you a price to buy and a price to sell. And that gap between the two of those is the way that the broker typically makes money in this. Most of you are not paying commissions for your Forex trading. Some of you might pay a small commission. Some Forex brokers have a hybrid system where they will create very tight bid-ask spreads and charge us small commissions. Other brokers will charge no commissions, but they'll have a little wider bid-ask spread. And so keep in mind, you're buying at the ask, you're selling at the bid, so that spread is your cost to make that trade. And in addition, that whatever that cost difference is between the bid and ask also then has to be converted back into your home currency. So there's also some home currency risk while you're in a trade. Your home currency may go up or down, which may also affect the profitability of your trade. So as you can see, there's a lot of moving pieces here to cash Forex to understand. And finally, the last aspect of Forex that I want to talk about is the concept of the carry trade. So keep in mind that, as I said earlier, that Forex pairs are very dependent on interest rates. And so when you're in a Forex trade, if you decide to hold that trade overnight, so what happens is that we call this a carry trade. And there has to be a adjustment for the interest rate differential between those two symbols. This could either be a credit or a debit to your account. For every 100,000 units that you are trading, that differential can be a credit to your account of anywhere from $1 to $20, or it could be a debit to your account. They could take money out of your account anywhere from $1 to $20. So just something to keep in mind. If you close your trade before the end of the day and then reopen it later, you don't have to worry about that differential. But if you do hold and carry the trade overnight, then that credit or debit is going to apply. Some people trade this trade when it's in their favor. When they know that they're going to get a credit every time they hold the position overnight, they deliberately hold the position overnight. That's the carry trade, and they make money on that. So if it's a debit to your account, you might want to consider not carrying those positions overnight. And again, we covered all this very quickly, but I just wanted to kind of give you guys a flavor of the things that you need to think about when you're trading Forex. So we're going to look at some tools today on analyzing the Forex markets. And I'm going to show you a chart that I use that looks at 3 different concepts. I'm a big believer in having multiple confirming conditions before I get into a trade. So there's usually 1 or 2 what I would call setups or filters that tell me that the market is moving in a direction that I want to move in. And then I'll usually have a trigger that gets me into the trade. And so I'm going to show you a tool that I use that looks at momentum, it looks at MACD, and then it looks at the performance, the relative performance using percent change of each of the Forex pairs, and then I make a decision whether I want to get into that trade or not. So we'll look at a chart first. And then we'll look at a radar screen using that same concept in the chart so that we can actually scan for opportunities in real time across those 28 major Forex pairs. Finally, I'm going to show you a tool that I use for all asset classes. It is a measuring widget that is two horizontal lines that you can put onto a chart and measure what the move of a Forex symbol will be to anywhere on the chart and from the current price. So that can be, it's very useful for me when I'm trying to figure out what my risk is at a particular stop level or what my profit level is, and you'll see that as we go through that. So the strength score concept is really, we want to identify in the list of Forex symbols the strongest and weakest symbols in that group. And remember, we talked a little bit a while ago about each symbol is made up of two currencies. So sometimes a currency is on the left-hand side and sometimes it's on the right-hand side. So that's important to remember when we're talking about strongest and weakest. So for example, if the Canadian dollar is on the left-hand side and we think the market's going to go up, that's strong. But if the Canadian dollar is on the right-hand side of the symbol and it's at the bottom of those, that is also strong. That's also bullish because we are bearish on the symbol on the left. As I said, I want to use multiple confirming conditions. I typically also look at multiple confirming time frames. So I typically look for a setup in Forex on a daily chart, and then I'll try to look at a 60-minute chart to see if this is the right time to get in. So the concepts here are relative performance, multi-time frame considerations, and we'll also talk a little bit about diversification issues. So for example, if we have a couple of symbols that are similar, like the euro, the Swiss franc, the British pound, for example, if I want to take a couple of trades long, I might not necessarily take two trades within that group. I might take, if I want to go long, I might go long the euro of those three or whichever one is stronger. And if I want to go long another position, I'll probably look for going long the Japanese yen or maybe the Canadian dollar, something that's not so correlated together like the pound and the euro and the Swiss franc are. Very similar to stocks, right? If the S&P makes a big move, the stocks go with it. So the three concepts in the FX score is a momentum average. So momentum is a real simple concept, right? It's whether the close today is higher or lower than the close of some number of bars ago. And we'll smooth that a little bit with an average. We'll look at the standard MACD, and we will also look at the percent change. In other words, the performance of each Forex pair over a certain number of bars. There are inputs that allow you to adjust for your trading style. If you're a short-term trader, you might use a smaller time frame to look at these things, or if you're a longer-term trader, you might use a longer one. I use a midterm length for everything, which is 13 bars, but that's just me, and you're going to maybe have a different way of looking at this, and you have that flexibility. All right, so let's go to TradeStation. The first thing I want to show you here is let's focus on the chart to begin with. I'm going to click on the Euro USD, and I'm going to change this to a daily chart. So the FX score indicator is this indicator here in the middle. It uses three concepts. It uses the momentum average, which you see at the bottom here. So when the momentum average is above 0, the strength score will report bullish in this first column. And when MACD is below or above 0, it will indicate bullish or bearish. You can see MACD is below 0 here. And so we are showing bearish here. And then the histogram is the percent performance over the last 13 bars. You'll notice I'm using 13 as my length for all of these. So this is the performance over 13 bars when I get a cross in performance from negative to positive, and I have a bullish momentum average and I have a bullish MACD. That's my trading opportunity right there. That's what I'm looking for. So this is the daily chart. This is generally where I will look for my initial trades. And then what I'll do is if it looks like, I get one of these crosses and I'm looking to maybe make a trade here, I'll look at the 60-minute chart just to make sure that I'm getting in at a good point. Now, one of the things I want to show you here in the chart, I was kind of preparing for this presentation, and I remembered that I had this kind of cool indicator that showed you which markets were trading during the day on an intraday chart. So when it's red, Asia has control of the market. When it's blue, Europe has control. In green, the US has control. So this is something that you know by heart after trading for a little while, but it's kind of fun just to have it on the chart there to kind of initially to see which market centers are controlling the FX market at that particular time. And again, here we're going to look at the momentum average. Is that bullish or bearish? What is MACD doing on a 60-minute chart? And where are we as far as our strength score? What is our performance on that 60-minute chart? As you can see, the same concept here is when this crosses above zero, that's when we want to get in, and we want to stay into that trade until we get either a change of direction in momentum average or MACD, or we cross back below zero. A lot of times you get these little noise trades. Sometimes you can't avoid them. It just looks like you made a wrong decision. You get out and then you get back in again. It's just the kind of the cost of trading these kinds of indicators is that every once in a while the market's going to move sideways on you and you're going to get those little noise trades. Just the cost of trading. So one of my favorite kind of just utility widgets, and this is called the FX calculator. Basically, it is two horizontal lines, and it shows you what the value is of a 10,000 unit Forex trade from the current price to that line. So if you're trying to figure out where your stop is or where your profit target might be, it makes it really clear in dollars what that move is. So this is the Euro USD, and it automatically makes that calculation, which is great. This is two non-US dollar symbols, and I want you to notice that we apply a conversion factor back into US dollars. You're going to have my email here at the end of the presentation. I'm going to provide these tools. Anybody who wants these tools, you're going to send me an email, and I will send you an ELD and a workspace that I'm showing you here. You can see the difference between those two lines. That's the center here. And you can adjust the currency size. So if you typically always trade, for example, 200,000 units, you can go to Format Analysis Technique. And here, this is FX Levels Calc right there. You can format that, and you can change the trade size right here. So this, by the way, notice the trade size modifier for FX is 1, which means 10,000 units. So if you want it to be 100,000 units, you would put 10. If you wanted 200,000 units, you would have to put 20. So now we're looking at what a price move is for 200,000 units from here to there. Let's go back to Format Analysis Technique so you can see the indicators that you're going to get that are applied to the chart. By the way, the MACD indicator, that's the standard MACD indicator that comes with TradeStation. So you can just drop that into, that's automatically applied to the chart. And I will give you, you'll see my inputs when I send you the workspace for the MACD. The momentum average is a custom indicator that calculates a certain bar moving momentum, which is a 13-bar momentum, and then I smooth that by 5 bars. So you can adjust that to a shorter time frame or longer time frame. That's up to you. This is the trading zone indicator. That's by the way, the trading zone indicator only works on an intraday chart. Doesn't work on a daily chart, obviously. And if you don't like the time frames that I set, or your time frames are different because your computer clock is different than mine, you can come in here and actually set the starting and ending times for Europe, US, and Asia. So you can have this line up exactly with whatever time zone you're on. And then my strength score, this is the core indicator of this presentation. You can change the momentum length, the MACD length, and the percent change length for the score. All of those can be set as inputs depending on your trading style. So that's the concept. Now, the benefit of being with TradeStation is that we have Radar Screen. So Radar Screen gives me the ability to apply that same historical technical concept that I have in one chart. I can now apply it to up to 50 symbols in Radar Screen. So here in Radar Screen, I've got the 28 major pairs, and you can see our FX strength indicator here showing me what the moving average mode is. That's this value here in the chart. So it says bearish and bearish. Here we're on the Aussie Swiss franc, which is the second one here. So that's bearish and bearish. So you can see that here, that's bearish and bearish, and the percent change is minus 1.58. So what that means, what that number means, is that this pair is down 1.58% over the last 13 bars. Now, right now, these are daily bars. Every row here is a chart. I've set this to daily bars. So that is 1.58% down over the last 13 bars, in this case, 13 days. So, but the great thing about Radar Screen, right, is I can rank this. So when I double click here, I can quickly see out of these 28 pairs, which is the strongest pair over the last 13 bars. So the Euro Aussie dollar is the strongest. I can click on that. I can see that we're in both bullish mode, and we've been up 1.23% over the last 13 days. What we really wanted to do was to catch this when it crossed above zero. So it's been in this trade for a little while, but what we're really looking for is this cross here. We're looking for that to all line up and get us into a long trade. And that actually wouldn't have been a bad trade right here. And so that's the whole point here. The concept of this presentation is symbol selection. What symbol should I be looking at to get long and short? Now, one of the things that I do in Radar Screen here is that when they cross above or below zero, Radar Screen will actually give you an indication here. So we don't have any crossing right now, but we have a couple that are very close. So here the pound US dollar is right at zero. So again, we may get a cross above zero here, or we may continue in the downtrend here. So don't neglect the overall trend of these markets as well. That's the whole point of looking at a chart. We can look at this chart and we can see that the British pound US dollar is in a downtrend. It's been in a downtrend since March. And so we have to ask ourselves, am I really sure that that is going to turn around if I want to go long here? I typically do not like to trade against these long-term trends, especially in cash forex. I need the market to show me that it's going to actually have a strong change of momentum in order for me to go opposite to that long-term trend. So keep that in mind as well. So here, if I double click again on percent change, I can see the weakest pair in this group is the Aussie Canadian dollar. And so we had a couple of opportunities here where they crossed that we might have been able to get into a couple of good short trades. This is a good example. I want to show you here right now. Canadian dollar is pretty strong, and I know that because if I sort here on percent change, notice the Canadian dollar here is at the top a couple of times. The euro is up here, but Canadian dollar is up here a couple of times. And notice the Canadian dollar is on the left-hand side of the symbol. So that tells me that the Canadian dollar is pretty strong here against those two currencies. If I come down here, notice the Canadian dollar is on the right-hand side of the symbol, and these are negative values, which means they are negative values for the symbol on the left, positive numbers for symbols on the right. So the Canadian dollar is in positive territory on all 7 pairs in this list of 28. So if you're on the right-hand side of the symbol and this is negative, that's actually bullish. This negative number is bearish for the left-hand currency. And so we might be looking for either to go short one of these or to go long a Canadian dollar pair. So that's what I have for you today. I hope you enjoyed this presentation. If you want me to send you these tools, but my email address is mburke, M-B-U-R-K-E, @tradestation.com. And I'm happy to forward along this workspace and all this custom easy language. All of the code is open, so you can go in and actually see what I'm trying to accomplish here. And you can take the code and modify it, or maybe use it as some core for some other indicator that you're interested in building. It's all up to you. I encourage you all to learn a little bit about easy language. You may not think that you need to be an easy language programmer, and probably you don't. But knowing a little bit about easy language allows you to go into an indicator and change an alert condition, or maybe add a moving average to some indicator that you want to look at, or smooth something. And it's really easy to learn just a little bit about easy language. If you go to our TradeStation.com university site, there's a free book called Easy Language Essentials, which will allow you to kind of get a feel for easy language and all the the different things that you can do with Easy Language. Remember that we have getting started classes on TradeStation every Tuesday, Wednesday, and Thursday. There's also Ask the Experts, where you can go into a webinar and for an hour and ask any question you want to Jesus Nava, who's the expert on TradeStation in those events. And so it's a great way to get some questions answered and to learn more about how TradeStation works. It's an incredible trading platform, incredible technology. It's just it's an incredible asset to have in your trading. So thanks everybody for joining us. Make sure that you visit our website regularly. Sign up for more events like this. We have 3 more events that are related to the TradeStation Global platform. Jesus Nava and I will be doing more of these events more regularly. So definitely keep an eye out on the schedule and join us for more of these events. Thanks everybody for joining us. Have a great evening or afternoon wherever you are, and good luck in your trading. I hope to see you again at another upcoming TradeStation event. Thanks so much.